Okay guys, what is up? In this video we're going to go over exactly how they pump our economy and when our interest rates go to zero and how it all works. So with that being said, let's go ahead and jump right into this video.
I've been getting dirty money.
So you guys see that I have this pulled up here. You know, what is the next thing going to do that the Fed's going to do? You guys know that interest rates are pretty much at zero, guys, which is great if you're buying a car or buying a house or something like that right now. If you guys still have your job and everything, congratulations, that's awesome. But I just kind of wanted to go over it because, you know, a lot of people are like 0% interest rate. It's a great time to buy and everything, but like what's going on with our economy? How are we still stimulating growth? Because a lot of it does happen to do with interest rates and banks making money and our central banks making money, guys. That's a big portion of our economy that people don't normally recognize. But with that being said, so one of the things I really want to go over here is quantitative easing. Basically, and that's what this guy from Goldman Sachs is saying. This guy right here is saying that it's Steve Goldstein, by the way, is what the thing is. But basically what they are saying here is that they use quantitative easing when interest rates are so low, meaning that they're not going to make any money. They're not going to be able to stimulate the economy still when nobody's spending as much money and stuff like that. And on top of that, you know, how do we keep our economy flowing? You know, how do we keep all the businesses still moving? But with that being said, all of that happens with quantitative easing. Now, what is quantitative easing? Because this is one of the two topics that I want to talk about on here. Quantitative easing is a process whereby a central bank, such as a Bank of England, purchases existing government bonds or gifts in order to pump money directly into the financial system. Quantitative easing, QE, is regarded as a last resort to stimulus spending in an economy when interest rates fail to work. So basically, since our interest rates are already at zero, the Fed's already put them at zero, basically for the end of the year, that's allowing then you have to move on to quantitative easing, basically, to keep everything pumping and flowing naturally, guys. That's really what that happens. Now, when it comes down to the actual stock market, because I'm sure that's what you guys want to see. You guys see the SPY hit over 300 again. It's been up there pretty much. It hit some support here and didn't really want to fall back down after that. We're up here still. Even yesterday had a really nice push at the end of the day, mainly because of Trump there at the end. But the point here is value versus growth. Are we really worth this? Is the S&P really worth that? Or are people buying that based off of that's where it should be? Like a business, you know, it's got cash flow, Amazon, everything going through, but should it be actually worth this amount of money? And this is the problem that I'm seeing is people are buying based off of what it should be worth in the future, and that's okay. That's okay 100%. But, you know, what is it actually worth? People like Warren Buffett normally don't buy at what it's valued at, or they buy what it's valued at right now, hoping that it's going to be valued worth more later. And that's kind of basic investing. But now you see a lot of these people, they're buying back in just because, when realistically we could still have another pullback. Now you guys can read these articles, guys. Both of them will be linked in the description. Just let me know what you think. Leave a comment below, guys. But that's really what kind of happened this week and what's kind of in the future. So that being said, thank you guys for all watching this video. I hope you guys all learned something at all, and I will see you guys in tomorrow's video.